Sure. All right, and we begin. So, hello everyone. My name is Jon Johnson. I am a mortgage loan originator, and these are two lovely ladies I have with me today. To my right is my forever partner in this podcast, the monthly mortgage market update with Jon Johnson and Gabriela Cernas-Frantz.
Hi, good morning.
And we have a special guest today, which is Tanya Canarte. How you doing?
Good, how are you?
Doing great. So Tanya is also a loan originator on our team. She's very good at what she does. She's been doing it for a while. So she's going to help us go through different topics, answer them, give you guys more updates on what's happening in the mortgage market, the real estate market, rate market, and maybe some goofy topics as well. But good. Let's go ahead and continue, please. All right, so the goal of this YouTube page, and pretty much the whole reason why I'm in this business is because I'm a huge fan of helping people to become debt-free. And I believe owning a home gives you a very smooth and easy way to get to that point. Purchase a property, you start, building equity in yourself by owning that property. Within a few years, you refinance and be able to pay off debts. And then eventually you go towards a 15-year mortgage, 20-year mortgage to pay off that home faster, to where now you're sitting on a $300,000, $400,000, $500,000 equity, and you're off to the races to being debt-free. But what happens in this podcast? We discuss mortgage and real estate news that has occurred in the last 30 days. This is June of 2022, so some of this information may be irrelevant come 30 days from now, 60 days from now. I'll start out with some rates, some numbers, some market data, and then we will transition into wide-ranging topics. I also will have the topics timestamps, and you can easily jump to the topics you want to hear. All right. So before we're starting, what is something in this industry that has been on your mind lately?
I'll go first.
Gabriela.
Right now, a lot of people are talking about the Federal Reserve increase the interest rates.
Correct.
And something that we've been hearing in a lot of our meetings and our regional meetings and sales meetings is that, what is happening on the national level isn't exactly how it directly impacts the mortgage industry just yet. So we kind of need to clarify what that actually means. This is where you guys are the experts. And so I'm bringing the perspective of, what the media is sharing, what type of effect that has on the consumers, our clients, the realtors, the buyers, and how we can actually provide real facts on how it actually will affect them and why there's still opportunities right now to still buy or sell in real estate.
You are 100% correct. If any buyer goes online and types in Fed rate mortgages and tries to figure out the correlation between the two, it's going to give you a ton of negative information, misinformation, etc. So I agree with you. That's why we're here, is to help clear up some of that. We're not going to be perfect on that. I do have a background some in economics, but I don't have a PhD in this stuff. I don't work for the Federal Reserve, so we can give some information. Definitely that's a lot better than what the news has. Tanya, what's been in your mind lately in this business?
The prices of the homes. I mean, some of my buyers, are having a hard time.
Yeah.
Absolutely.
It's unfortunate.
Big factor right now in Florida.
Yeah, they go under contract potentially, and if that contract doesn't work out and they go back into the market, and the homes are now $20,000, $30,000, $40,000 more, or they were looking for 6 months, but they were competing with 20 people for every property, so they got burnt out. Now they're ready again, and unfortunately, the home prices have gone up some more again.
Not only that, but the rates have gone up. So when I approved them, like a few months ago, they're at a lower rate. So now we have to redo the pre-approval and, changes a bit.
It does. Unfortunately, I have some information on that as well that we can be able to chat about. I don't believe I was able to put the 0.75 in the slide. So we can go ahead and quickly touch that real quick. So actually, no, I did put it in there. So we'll chat about that a little bit soon. But something that's been on my mind lately in the industry, and this is hitting me heavily because I'm reading a ton of books on appraisals, is the value of land. I mean, I'm in this business. I mean, Tanya just mentioned it, properties going up in value. it's a crazy thing. I mean, I think I'm a smart guy, but then I just read this a couple of days ago, and it makes complete sense once I hear it, but the properties actually are not going up in values. Just like with cars,
Yeah.
properties depreciate. If you put a home on a lot, then the actual building 70 years from now, 30 years from now, 100 years from now is actually going down in value. The land is what actually appreciates. That's what's actually going up in value. And of course, you can be able to keep that value good in the property if you maintain it, if you make sure that new roof, when it's time for a new roof gets put on it, or other things need to be fixed, you can maintain that value. But overall, the actual value of the property, the building decreases, and it's mainly the land is the part that's increases. So just appraising land values, things of that nature, that's been on my mind a lot.
Yeah, and none of us are appraisal experts, as well, but yet we'll always leave opportunities for growth. But you're absolutely right. If we consider, like, there are homes that were built over 100 years ago, they get demolished and a new home gets built, and there's a whole new property value on the home and the land itself. Same piece of land, same piece of dirt. There's just a new home on it.
Yeah. I mean, it's a lot that goes into it. Like a piece of land, there's always a highest and best use for that piece of land.
Yes.
And so if it's in a residential area, maybe that's putting a home on it. If it's more a commercial area, maybe that's putting a store or a restaurant. So it's a lot of interesting stuff that gets really deep once you start looking at, values, land, things of that nature.
And also even mentioning that some of the zoning gets changed over time as well. Some land that may have been zoned for maybe agricultural may get zoned now for residential. And this is where we kind of get into maybe like the USDA type of loans as well, correct?
Sure.
Okay.
Sure. It's a long rabbit hole, but we'll
get there.
We'll get there over time, though. What else we got on here? So rates. Anytime someone's listening to mortgage folks, they always want to hear about rates. Rates are not that important, in my opinion. The monthly payment is what's important to the buyer. And if you can make the monthly payment work for you, it doesn't matter if the home is $300K, $500K, $1 million. Owning a home is going to be a lot bit more beneficial for you than actually renting. But we'll quickly go over rates because people always want to hear about that. So the Federal Reserve rate is the rate that banks get their money. Fixed mortgage rates, but not really. Inflation is the biggest thing that's going to affect your mortgage rates, and we're seeing that a lot right now in our markets. And some general world news affect rates. Back when we had the last presidency, it could be a tweet that could go out, and rates could change, 0.25% just because of a tweet that happened. They've been a lot more steady when it comes to the world news, but that inflation has really been the big driver recently. So I'm gonna show you guys a slide. They've seen it before, but the people who are watching this, if the numbers on this slide that I'm showing you, well, first off, this is what rates look like over the course of 6 months. Every single day they go up and down. They don't stay the same. And for almost every program, a buyer can get, an option between 15 different rates once they're under contract. But this is mortgage-backed securities. And when it comes down to it, lower on the graph means higher rates. Higher on the graph means lower rates. So around January, it was probably around in the mid to low threes when it came to the interest rates. Where we're at right now is we are in the mid to high fives for your average buyer. Now, which means some buyers a little bit lower, some buyers a little bit higher. So overall, what do you feel about this when you see this? Tanya, since you're a guest, go ahead.
Yeah.
After you, I apologize, Gabriela.
That's okay. I think when we covered this chart before, it's really kind of put a lot of things in perspective that, people look at graphs as like, oh, if it goes up, it's supposed to be good. But in the mortgage world, or upside down, it's the upside down world. It's that in this,
Somebody watches Netflix.
Somebody watches straight. Small. But we are looking at in this scenario where, and this is where, as you guys are the experts in this, and this is where, I get my education as a consumer working in the office as well, is that it makes sense now over time, but the average consumer doesn't understand what this graph means because we are taught that sorry, it's okay. It's that when things go up, it's a good thing, but not when they go down. we need to change and educate the borrower and the clients and realtors who, and by the way, there's a lot of realtors who are very familiar with this information. They're actually probably just as close to being a mortgage expert themselves, because they do stay involved and educated so that they can also pass that information to their clients who are out there in the market to buy as well.
Sure, I'll say, we're not experts at this.
No, not at all.
We don't want buyers and agents to become experts at this. It's good to understand where things are trending, but overall, we can give you some information because we're in this every single day. But like we said, none of us have PhDs in this stuff. But Tanya, what do you feel when you see this, how rates have been trending, things of that nature?
I feel scary for my buyers just because, they are trying to get into properties, and because the rates have gone up, it lowers their possibilities to get something because of the property values are going up too.
Got it. Yep, you're correct. So you see this, you get fearful because you understand that buyers are trying to purchase and it doesn't look as great for these buyers. I'll tag in a little bit. It can look scary when you're seeing the rates are going up. But a great thing is that the rates are tagged along with inflation. If inflation is going up, then rates are going up and tagged along with that. Or at least with mortgage rates. We're not talking about when you're going out to try and, buy a car, getting a car interest rate, or just a loan from a bank. This is a longer term product, which means that when inflation goes up, that's also a longer term game. Mortgage rates are going up as well. But they also, I probably didn't include on here because it was way too much information, but they're expecting inflation to start coming down towards the fourth quarter. So around, holiday times, et cetera, they expect for it to start coming down a little bit. So rates may get a little bit worse than they are right now. They may get into the 7s, and may get into the 8s. Nobody knows. I mean, experts were saying that, rates should get into the 3s or into the high 3s. That's what they were saying the beginning of this year. And now look where we're at right now. So no expert can, even someone who studies this and has PhDs, they have no idea. But one thing they can say for certain is once inflation starts coming back down, which it is going to come back down, mortgage rates will also come back down as well.
Let me, and considering that that is the what they're looking towards or hoping the trend goes towards as well, is that the buyer the buyer has to make the decision as to, well, if I'm hearing that and I decide to wait until the fourth quarter because rates are going to be better, then the buyer has to have an honest conversation, with their lender and also with their realtor as to how serious are they in the home buying process? Because if interest rates are going to be a main factor for you, that's taught us in the last couple of years is that they will change. They constantly change. It is actually going to be the why the home buyer needs to buy a home right now at the current interest rates, knowing that if the interest rates, may trend downward later on, that they can look at other options for them at that point as well.
Sure.
Like when we did the refi, so there was a huge refinance boom that we were also, was beneficial for clients who did purchase homes at a higher interest rates, 3, 4, 5 years ago.
Sure. So the big thing is that home prices are going to continue to go up.
Yes.
And that's something that almost every expert will say 99% chance it's going to continue to go up. 7 of the last 8 recessions, home values have continued to either stay flat or go up during those recessions. The only time it went down was 2008, and that's because people had interest-only loans. They were able to get refinances for more than the value of their properties, to where people were getting negative equity, meaning that they were actually doing themselves a disservice. While right now, 40% of homeowners for their primary residence, they actually own those homes outright. So overall, home values are planning to still increase. So even if you decide to wait for interest rates to go back down, we don't know if it goes up to 10% and then it comes down to 8%, or it goes up to 11% and comes down to 9%. Nobody knows. Nobody understands where rates are going to go. Nobody can be able to do that. That's like being able to time the stock market. which
Yeah.
if anybody could do that, there'll be a billionaire and they wouldn't even listen to us right now.
They would. And that also goes back to the home buyer why, like, that is something that is kind of that has been constant is the property, the home values themselves. You could buy a home right now for $350,000 at the current interest rate, and then fourth quarter, that same home, if it goes back in the market or similar home, now it's $425,000, but the interest rate maybe is a little less. There's going to be significant jumps, and these are hypothetical numbers, and there's no expert number, here, but that is what you have to equate it to. It's like the price you'll pay for a home now versus the price you'll pay later on, based on historical data and where things are trending, aside from interest rates, because those are variables we don't really control.
Exactly.
Sure. If you're an average person, get in the home as soon as possible. If you're somebody that's playing in I'm buying homes in the 1 million, 1.5 million, 2 million range, those are the ones who should be concerned, because those numbers being 20% higher, 25% higher are a lot more volatile, because there's a lot less demand for those properties that are continuously going up crazy amounts in value, rather than the homes that are 300, 400, 500K, which, maybe it goes from 20 buyers putting offers on those properties to 10 buyers, and then to 5 buyers. There's still gonna be 5 buyers, offering on almost every single property. That's a ton of demand happening for them. Cool. Let's see what else we got.
Yeah.
I did actually put in there. Fed hike rate 0.75%. So this is what it looks like. We can go quickly on this since we briefly mentioned this earlier. But overall, you can see Fed hikes rates when they believe a recession is about to happen. So because inflation, they have to. If you don't do it, then depression happens. So as you can see, they start hiking rates 2000s, and recession happens right afterwards. But then rates coming down. They started hiking rates again, recession happened, and then they started hiking rates again, recession, and right now they're hiking it once again to be able to try to avoid, the magnitude of inflation. Anything y'all want to say on this before we go to the next? And by the way, we'll have some more fun topics too. We're getting through all the
serious stuff,
all the mortgagey stuff right now.
Mortgagey stuff. Yeah, mortgagey. Is that with an EE or an EY or an IE?
You know what? It's with whatever you would like, Gabriela. You got it. Mortgagee.
What'd you say?
So Black Knight's monthly data, popularity of certain loans, purchases are making up a huge percentage of the share of deals that are happening right now, 82%. And this was not the case a year ago. A majority of people were doing finances. But month over month, rate and term refinance volume fell 23%, while cash out refinance fell 11%, and purchase volume only fell 2%. And rates right now are almost double what they were, 6 months ago. But purchase volume is only down roughly 2% right now. What do you feel right now about these data where refinances are at, purchase volume, et cetera? Tanya, our guest.
I feel basically, you caught me off guard there. Caught me off guard.
I apologize. Gabriela, what do you feel about that?
Well, this is where you guys are the experts on this. You've seen more loans, the numbers, and even in the reports that we get from corporate. My view on this is that if we're looking at the purchase volume that only fell 2%, inventory. It didn't fall, only slightly because there's still limited inventory, or I'm not sure what other factors, consumers are looking at, because, if we focus only on the state of Florida, right, because that's where we're currently licensed, and this is where we practice, our services at this time, is that, looking at these numbers, are these national numbers?
Yes.
Okay. So that's always where I want to kind of clarify. So we may be having an inventory issue here in the state of Florida, but there's also other areas that may not necessarily have an inventory issue because they're not popular states to move to. So as far as the other, that's kind of you guys,
Sure.
like, yeah.
But I think what that is saying is that the purchase price only fell 2%, meaning people are still buying.
Yeah.
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 So people from all the other states that, like New York's very expensive. So a lot of New Yorkers are moving out here, and buying out here and stuff like that. So
Cost of living.
and all of that.
Correct. You are correct, Tanya. I'll give some more information as well. Have some more data later on. To speak to one of your points, this real estate game is very local. We give national data, we give Florida data. When it comes down to it, what's happening in your county? What's happening in your specific neighborhood in your county? For example, we're still seeing a pretty big shortage of inventory in our Tampa Bay area. While I just read some data today that over in Arizona and some other places, their inventory has doubled already in the last 6 months. So when I say it's going to be, some locations will actually have prices go down. Many other locations, prices are going to still go up. Overall, nationally, 99% of people are saying that the national average when it comes to real estate prices should continue to go up because the demand is going to still be high for majority of it. But in certain niche locations, it's going to be, they may go down, inventory may increase by a ton, and there may be some deals out there, but it just may not be in your neighborhood.
Yeah, and also, to consider too, when we're talking about like areas of, and thank you for mentioning other states too, because that's why it's like, I was kind of clarifying, like, are we looking at this from a national level? Is that, builders at one point, they were having an issue with, with building supplies. So that means they already had the land, they already had the dirt purchased, and they probably couldn't build on it yet because they were waiting for, shipping and, materials. And yes, even the cost of goods still went up because of supply and demand issues. So now that they're able to put inventory back into the market, so this, may I ask that maybe we can get some builder, stats put into here for our next podcast? Because I think we need to also look at the builders market and see where they're at. Like housing as a whole, it's a home that's already pre-existing, but builders are what could be a factor in adding inventory as well. State of Florida, there's still builders that are building small communities.
For sure, up by where I live.
Yeah, Nassau County. I remember, I've lived in Florida since 1987. That's quite a while for some people. 1987. Yeah, it's been a hot minute living here. I've seen a lot of growth. I remember Pasco being dirt, agriculture, cows, you name it. So in the nearly 4 decades that I've lived here, I've seen a lot of changes in what I will consider our local market, but also considering that we are talking to somebody who may be watching this video that isn't in Florida. So, this is just currently what is happening nationwide, but your niche market, that's where your local experts also provide more insight for you.
Yeah. I'll hit these numbers one more time too, and reiterate what Tanya was stating. Like, yes, refinance numbers fell, but people are still doing refinances.
Yeah.
Even though mortgage rates are higher, there's still an opportunity for some people to be able to capitalize on refinances. If you're trying to maximize the equity in your home, it doesn't matter if the interest rate is 10%. If you're going from a 30-year to a 15-year, you're going to be saving tens of thousands of dollars when it comes in interest over life of the loan by going with a 15 or 20-year over going with a 30-year. So a rate and term still could potentially benefit you if that's your main goal. Many people have tons of debt. If you have $500 car payment, if you got student loans, if you have another car that you're paying for your kid, if you have loan, credit cards, etc., that total $1,000, $1,500 a month, etc., even though your interest rate and your mortgage may have gone up, if you refinance and you're able to, and let's say your mortgage goes up $400 because you refinance, but you're able to pay out $1,000 in debt, you just added $600 to your monthly payment just by doing that. So even though things go down sometimes, just understand that there's still a market for people. And if you're someone in these certain situations, still speak to your lender as soon as possible to be able to get that number and that data.
Yeah.
Good. What else we got?
Good stuff.
All right, there's a lot on here. I don't like doing a lot of words. That's not normally my game, but I'm gonna read this and then, just kind of you ladies, just take one of the lines and just let me know which one stuck out to you the most and give me what you feel about it. So MBS Highway, they come out with data every single day, but I like to look at their monthly data as well because they try to break down what's happening in the actual US market. So S&P 500, so pretty much the stock markets, it normally averages about 9% growth year over year. It's currently down 17% since January. Savings before the pandemic, citizens saved 7.8%. During the pandemic, it rose to about 33%. People started really saving, they didn't know what was going to happen, et cetera. But now savings are below the pre-pandemic levels, is at 4.4% of their income they're saving. Social Security paid out $59 billion more than it received in 2021. This is the second time this has happened in 25 years. Construction, there we go. You got a little bit of construction. Cost of building material and supplies has increased 69% from January 2020 to April 2022. And 38% of homeowners have no mortgage on their primary residence. Ladies, which one of these stuck out to you the most? And give me your feelings on it. I'll start with Gabriela, since you got a lot of oohs and ahs.
Oh, because I said ooh, ahs, and then the thumbs up. Oh man. Let me actually touch on the savings one. And the other stuff, it's good information and it really puts it in context, but the savings one is the one that, and I'll speak personally because of it. So, it's actually nice to know what happened, because I thought it was just maybe me or maybe a few other people, but we didn't go out. We kind of stayed home a lot. Places weren't really available. Unfortunately, some places did shut down. But we also started noticing that we just had extra money. And so my biggest thing, coming from the background that I've come from, I was like, okay, extra money means save. Like, if there's ever a time as an individual in this time frame that you can save money, that's what was happening in my home. We were saving money, and so much so that and saving money doesn't mean like hundreds of thousands of dollars. I mean, to me, it was just being able to save an extra $500 a month. That's huge for my family. And looking at it now and the numbers of like where people are down saving, since everybody feels like they're hey, let's go back in, let's go to the restaurants, let's go out, let's have vacations, let's all the things that people felt like they weren't really able to do before. It almost feels like the great release, going out back into the world, out into the wild, and it costs money when you do that. So the vacation,
yes, it costs money.
Gas. Oh, we'll be very careful when we talk about gas nowadays. Yeah. I've seen plenty of memes, but yes, the cost of going out, fuel, places. Then you have a supply and demand issue. So the cost of, that morning breakfast that used to cost, family of four, about $40, $50. Now it's like $60. So the cost of things has gone up. And cost of living has gone up as well. I don't know those numbers to be exact. But that when you're spending more, especially when you're spending money that you've saved, you're not going to save as much as before. This maybe speaks a lot to I'll use the word very carefully, but to the psychology of how people were feeling, very trapped, very homebound. Introverts, as I introvert, I loved it. I was at home. I just, no obligations to go out into the world and just staying home and connecting with people on social media and just being home. I'm a homebody a lot. So, but not everybody is. People wanted to go back out and reconnect with people.
Well, not only do you need to reconnect with people, but also going out helps those other people with those companies that need
Yeah.
you to go out
And it's an
buy.
overall good feeling, so I don't want to look at this number and say like, oh, wow, people are not saving anymore, but it is an overall good feeling to be able to go back out and enjoy the things that you maybe were held back from or personally held back from. And now that you can enjoy, but some of the things that you may have learned during the pandemic about saving money, being better with your resources, making the decision like, do I need to spend the money on that or should I just wait? I know that my husband and I, we actually took the opportunity to save so that we could throw my daughter a big quinceañera party, Sweet 15, Spanish background here. And we did. We paid for all that out of money, no credit card, no debt whatsoever. We literally paid for that cash. And that was from saving. And I mean, we'll call it pandemic money, but hey, saving from that time allowed us to be able to do that for our daughter.
Good. Tanya, all these numbers we just went over, any one of those stick out to you? Any feelings on it?
I was gonna touch the whole savings.
Oh, I took it. I'm sorry. You can add more to it, please. Like what it meant to you too.
But on the numbers, the construction of costs, building material and supplies increase. So that all goes down to the pandemic as well. And I think that's why a lot of the builders are like, they started and they're just incomplete, some of them,
You would see projects that were like the ground was leveled.
Yeah, everything started and it's incomplete, but it's picking up. I'm pretty sure it's picking up.
Yeah.
So we're gonna have more houses in the market.
More inventory, more houses, more things coming true.
That's the goal. That is the goal. Saving, saving, saving. Save up right now.
Yeah, that's a good slide.
All right. I can't even read what's happening with this slide. This is appreciation over the last, 10 years on the ones to the left. And then we also have the forecast for appreciation for 2022. So on the left, as you can see, and I could have extended that out for a much longer time period. But when it comes down to it, appreciation for homes around 4 to 5% is normally what you want to be around. And since 2012, it's been around that amount for the majority of the time. Over the last couple of years, that has accelerated a lot. So, and that's mainly because interest rates got a lot of things happening at the same time, but interest rates being very low was a very big factor. But experts are not seeing that it's going to be, like depreciation. Many buyers, and I tell you this, almost every buyer I talk to, they tell me over the phone, oh, well, when homes go back down, they think it's like stock market. Oh, when it goes back down, there should be a deal. Like, it'll appreciate less. So instead of appreciating at 19-20%, it may appreciate like what the experts are forecasting. They have no idea, by the way. Like experts never have any idea, but
forecasts, just like the weather.
But they're saying, 9, 10, 11%. They're still saying home values continue to increase. This increase at a less fast rate. Gabriela, what are your feelings on that?
I think it was the podcast before, if I'm correct, where we actually had a chart, and actually might have been 2 podcasts ago, about the actual appreciation of home values throughout the country and where Florida was at as well. It was a significant, it was one of the highest appreciation levels of home values next to California, New York, and some of the big metropolitan states where they have a lot of population. I think that means the same thing, by the way, sorry. But
you think?
Yeah, I do, because this is what we do in the podcast, is we just, sometimes the words like mix. Going back to as far as that chart, because I can mentally see the chart, and I remember seeing that Florida was like 63,000, like some of the homes were in appreciation and value. And those are from the numbers that they had calculated back then. This is a forecast that's still in alignment, that it may not be as high as you just mentioned, but they're still going to steadily rise, just not at the rate they were before. And all the factors that contributed to home pricing increasing within a short amount of time, maybe it was something that was due to come eventually, but a lot of factors certainly did play into that. You know, besides the 2007, 2008, you know, we consider that unfortunately the status anomaly in the housing market. But this is still something for buyers to consider when we go back to what we're talking about, the interest rates, and how there is a projected trend that interest rates may go down in the fourth quarter. But this is still further adding to the home price is still going to go.
You got it.
Yeah, it's another graphic that's just saying the same thing, but now it's saying, now let's tie this to the home price value. The other one was interest rates, home price value. And this is where buyers, you know, need to just have a really good conversation with a lender, even a financial advisor. I mean, if you are one of those individuals that, you know, that you have a great financial advisor that you're talking to, I believe that they are also very informed in how people should invest their money and also the financial decisions that they make in financial planning. And financial planning also includes real estate.
You're correct. Tanya. Kick it back to me. Yeah. All right. Gabriela, she mentioned a ton of it. When it comes down to it, we're dispelling the myths.
Let's
So
do it. We have
that's
to.
what we just did. We showed you some numbers. Home prices keep going up. So it doesn't work the same way as the stock market. The stock market every 7 to 10 years is supposed to have that big dip and then come back up again. Home prices, it doesn't work that same way. But I'm no expert though. All right. This is if you're a real estate agent, I highly recommend following NAR Research on Twitter. They always give pretty good information, relevant graphs, data, etc. So we'll have a couple slides attached to that. So a homeowner who purchased a typical home 5 years ago would have gained $125,000 from just price appreciation alone. Gabriela, what do you feel about that?
Facts, hashtag facts. I mean, it's kind of true. Just the numbers are there. You can go, this is public information. You can pull up a home that you're interested in purchasing and go to the property appraiser's website, put in that home address, and you will look at the price of that home when it's sold. However far many back years, it'll actually give you the data. You know, this may be a tweet from NAR's research, but prove it yourself. Find a home that you're looking at, look and see what the pricing was, and then you'll see the home's value has been increasing over time. You know, not to say that 100% of the homes are in that situation. Every home is going to be very unique, but this is a NAR's research is somebody who is doing the research to data mine all this and put it together. And while they just put it together in one sentence for you, if you're really curious and want to do the research yourself, pick a home, pick one, pick two, pick three that you're looking at right now that are in the market and go from there. There really isn't much else that I can add to that. I mean, it's a simple statement, but there's truth to it.
Sure. See, what you got?
Definitely facts.
Yeah.
Understood. I mean, when it comes down to it, if you're renting, it's very, very hard to save $125,000.
No way.
I know some people who, you know, I have some friends in New York, etc., who they're very good with the stock market. They make very, very good income. So maybe they can rent and they know how to be able, and they have a good discipline to be able to save their money up. But your average person making, you know, minimum wage or a little bit more than minimum wage, and they're renting and maybe even sharing an apartment, it's tough to be able to gain your income like that. While when you own a home, not only is it appreciating, so it's going up in value, but also you're paying down on the actual loan amount. So you're building your equity in two different ways. So owning a home is a good thing. That's pretty much as it says.
Yeah. Yes.
All right. Another article, another tweet. It's painful that on the same $300 mortgage, the monthly payment rose from, let's say, roughly $800 to roughly, rose from about to $800 a day. What am I saying?
1,800.
Yo, appreciate it. That's why I got you on today, Tanya. I appreciate that. I'm normally not tongue-tied, but hey, it happens. 1,800 today from 1,200 in December. Consequently, it will shrink the buyer pool. So this guy was venting a little bit. He's one of their researchers, talking about how, you know, for the same property, payments have gone up maybe $300 a month.
And that's what I was saying earlier. You know, like my pre-approved buyers that were looking for a $300,000 home, you know, because that's the payment that they could afford, let's say 1,800. I mean, 1,265 that back in December, right? And now it's like 1,800. Now it pulls them back out of that price range, you know? And when I get clients like that, what I end up telling them, I was like, you know, look at it as an investment. You know, it might not be the home that you are trying to buy, like your dream home, but it's better than renting, and just look at it as an investment because you're going to build the equity in there, and then you're going to put more down payment towards the new home that you want to buy.
Sure. Yeah, we
Right.
mentioned this a couple of months ago.
Yeah.
When you're renting, you're paying 100% interest.
Mhm.
Nothing is going towards yourself. When you actually buy the home, if you can stomach the monthly payment, that's the most important. Can you stomach that monthly payment? If you can, you're going to be having that appreciation like we showed in the last slide going towards you. Your interest rate is much lower than 100% like when you're renting.
Yeah.
It helps out a ton.
Yeah.
Gabriela, what you got?
Hey, we covered it. I'm good. Everything that we just said, we're basically just adding another commentary from somebody else that is saying the exact same thing. They're just taking a good example of what that is. And Tanya, you know, and when you're speaking, you know, especially with your buyers, you know, when they come into the office and you know, you get to hear their story, and you get to know why it is important for them to buy. And when something puts them out of that market for, you know, whether it's how much income they have, you know, those factors are, yeah, it can be very upsetting. However, we also have to find creative, and we say creative ways, is what tools do we have at our disposal as lenders to be able to help in that regard as well. Sometimes it is just having a conversation about, hey, if right now you feel like you are priced out, then these are some things that you can do to get you prepared in the next 3 to 6 months. Because if you already saw that this is happening right now, the situation isn't going to change too much. If anything, it's just going to maybe get a little bit worse for them, you know. So what that means to the buyer is that reassessing their finances, saving more. And, you know, I know it sounds easy to say, you know, if a buyer's watching this right now, you know, your situation is always going to be very unique in what you're able to do. But it goes back to your want and desire to buy that home. And about a $600 increase, you know, that's a lot. But that also means that you have to find $600 in your budget to make things work.
Sure. I'll mention a couple more things off this, and we can be able to go. Location's a big factor, by the way.
Yes.
So, like, if you're just dead set on living in a certain place and the home values are just way out of your range, unfortunately, it may become a point where it's very, very hard for you to buy if you're only set on a certain location. But I do, you know, business all throughout Florida and even in some additional states. Buying a home in Tallahassee in Florida, a home going up 20% is still a lot less than a home going up 20% in Tampa.
Oh, yeah.
Your average home in Tallahassee that went up 20%, it may have gone up 30K. Your average home in Tampa that went up 20%, it probably went up 60, 70, 80K. So location is a big factor when it comes down to this. Also, when it comes to always know your big why. So if you're renting right now, then guess what? Your rent is going to keep going up every single year. And at least when you're getting that home as a mortgage, that whatever that monthly payment is going to be, that's going to stay there unless you refinance, change it, etc. But like, and if you're also already own a home, but let's say you're not in a great district for school for your kids, and you want to be able to live in a great district, yeah, your monthly payments may go up $300,000-$400,000 a month to get that next property.
Yeah.
But if that means that you can own that home for the next 15, 20 years, and your kids can be in a better school district, safer community, et cetera, for your friends and your family, you just gotta weigh what is the big thing that you want. If the monthly payment works out for you guys, continue on with that goal because that's most important.
Yeah, I mean, I would even flip this to say that, for renters, it's painful when you're paying rent and you were paying $1,265 monthly for rent and now it's gone up $1,800. So, I mean, this is a mortgage, example, but if you're a renter, just put in that you're a renter. This is the reality for most people right now.
Sure, you got it. What else we got? Some more numbers and stuff. I might want to skip this one, but we'll see. So pretty much, it's just talking about affordability. If you listen to the news, you're going to say it's not affordable, it's not affordable, it's not affordable. Well, on average, the average household income, which is the top left, has actually gone up in America. So even though monthly payments have gone up as well, people are earning more income. It's coming out on average for a household to be about $600 a month higher income per month. So like we saw in the last slide, monthly payments have gone up, but also income has gone up some too. Affordability is down, and that's unfortunately because the whole market is getting less affordable when it comes to gas, groceries, et cetera. But if your income is growing and you're able to budget a little bit better, then you could potentially still be in a better off situation than you were last year. Any you ladies want to say on this?
The affordability that we're talking about, that's April of 2021 to April of 2022, correct?
Yeah, this still shows that homes are still affordable for a majority of people. That 109 is still a good number. It's just a little bit less affordable than when interest rates were, 3%.
Okay. Yeah, I think it's pretty similar. I mean, honestly, for me, the chart just says, all right, everything we've already been saying, like I said, we're just showing different ways to explain it so that if that other graph didn't spark an aha for you, maybe this one will spark a little bit more of an aha or all of a sudden the dots seem to connect a little bit more.
Sure, you got it. All right, I actually want to show a video. Not a video, but like a little animation that I found. So this is going to be the cost of land since 1975 up until today. And so you can see that when the states get closer towards red, that means that cost of that land is going up into the 100K. So California is already in the 100Ks by 1990.
First.
Yeah, they were first. But as you can see, it'll end up going back down again. Now it's going back up again. In 2001, 2002. Yeah, look at it.
Oh.
Look at the cost of land. And then the recession happened. A lot of states went back green again. California is still pretty high. But as you can see, it's going back up again. So, ladies, looking at this right here, what is your vibe on the cost of land? Not Tanya, let's go Gabriela, since you got, you got a lot of exhales and
sigh.
Our resident heart emotions, the one that cares.
The one that cares. Gosh, I need to find a speck of green in Florida to buy.
There's plenty, by the way. If you look for land, there are plenty of land that's, 5K, 10K.
Oh, I know.
Just location is always the main game.
Oh, I know of a place near Sandy Springs, actually. Yeah, I mean, I don't know how best to put what I'm going to say is that if you can invest and be patient in buying land in time, maybe rather quickly.
Yeah. And by the way, this is like all land. So if you're buying land in the middle of nowhere in Ocala, that may be only going up by a little bit. It's not going to really do too much. It's not going to have too much value. It doesn't have a high value of use.
Yeah.
But you're able to get a plot of residential land or land in the commercial area of a city that's growing. I mean, it's going to really get up there. Tanya, what are you getting from this?
It's gone up.
Yep.
A lot.
Yeah.
We need to go back to the green a little bit.
This is where like, can we see some more green here, please, a little bit?
Also, incomes have increased. Like incomes in 1975 compared to 2020 right now. It was a lot.
I got some nostalgic feelings here for a moment. It's going to come up again on 2007 and 2008 when, things kind of went, and then there was some green came back up
In
there
30
as
years,
well.
people were like, oh, you were able to get land, residential land for $100,000.
Mm-hmm.
Like, they're going to look at us and be like, yo, that was crazy cheap. The same way these people in 75, like, oh, you got your land for only $500. It just keeps going up.
Yeah, I'm going to have more gray hairs by then, but yeah, definitely.
More gray hairs. I see nothing.
I see all of them. And I own every single one of them. Again, if this can even just connect more dots for people, we've seen a lot of graphs, a lot of charts, and we've had a good discussion.
Yeah.
And Tanya, thank you, so much for being a guest today and providing, some of your experience and insight as well into it. If this connects the dots for anybody, then I think we've done our job today.
By the way, Oklahoma stays green the entire time. So if you guys are looking for some land,
Oklahoma. I didn't notice. Does it?
Yeah, it stays green the entire time.
Oh wait a minute.
The middle of the state stays the lightest green for majority of the time, but Oklahoma stays dark green the entire time. So everybody who wants to be in these booming cities and they want to be in California or New York or or coming down to Florida, that's all fine and dandy. But if you want to be able to buy a cheap home and be able to live an introverted life, if that's your game plan, there's plenty of places that can be able to get it to you. You see it? It's green the entire time. The middle of the state.
It's like everything's okay in Oklahoma.
Yeah.
That was a good slide. Thank you.
Yeah,
That was actually.
It was pleasing. Got away from numbers a little bit.
Thank you.
That was still numbers, but a little bit. Apologize, more numbers. I just love numbers.
I mean, you guys live in numbers. I mean, that's what you guys do. The numbers is what helps, this number helps with this number helps with that. I mean, that's why I don't do the numbers. I do the talking.
Talking, marketing, flyers, all that good stuff. So this is a percentage of a home's value that is coming from land, the land underneath it. So back in the 50s, it was only about 17% of the value of the actual home was coming from the land. So the land helps us drive the value, but the having the property on top of that land for its best use is what actually gives it that high price point.
Right. And everything around it.
Exactly. So it was only around 17% around 1955 that the total value. Let's say if a home was selling for $400,000, then only 17% of that in 1955 was coming from the value of the land. As you can see, that's been kind of increasing over the last 30, 40, 50 years. So where right now it's probably around 37, 40%. Anything from this right here?
Oh, I love history. So there's a lot of historical overlay as well too. Also mentioning the buying power that women were also able to obtain as well, where they were able to actually obtain their own mortgage and credit cards as well. That brought in a new group of individuals and, into the buying market as well. Female real estate, agents, they were the pioneers in the mid 50s, 60s, and 70s, of real estate as well. So how that kind of equates to like the land share of household is that, more people were able to actually start buying land, and the demographic changed in that sense. So whenever you bring back these numbers of like back in the 50s, there's a few things to consider. We're talking about the baby boomer generation. We're also talking about a new pool of buyers that entered as well. Also, there wasn't a lot of regulation in lending back then as well. So we didn't really start seeing more of the regulation until really after, especially after 2007, 2008, there was more regulation from lending practices as well. And so overall, as a country, this is what progress essentially looks like.
Yeah.
Progress, more people are able to buy property. And that's still part of the American dream.
Preach, Gabriela. What else you got? All right, less numbers. Hometown Heroes being added to Florida Housing Down Payment Assistance. Tanya, I know you got something to say about this. What do you feel about that?
Yes.
I think that's great. It's great that, we're able to provide, this program's able to provide up to 5% of the loan amount.
It's a lot.
Mhm.
It's a lot.
For
Now,
assistance.
not only 5%, but the max loan amounts are much higher than other down payment assistance
Obviously.
programs. So there's
Correct.
different types of down payment assistance
And the
programs.
income is a little higher too.
Income is a lot higher. So the max income for a lot of programs, it'll be around 70K, 75K, et cetera. For these programs, it's like 115K, 120K. In some counties, even more than that. And the max purchase price you can go up to for most other programs, it may be 350K, 370K. For these, if it's FHA, which don't look up these programs, you go down a rabbit hole of not understanding, but FHA, 420K, VA, conventional, it goes up to $640,000. And if you're able to get, on a 500K home, $25,000 in assistance because you're a medical professional, because you're a firefighter, because you are a teacher, all these have to be licensed. You definitely want to speak with a mortgage originator who deals with these. We deal with them on our team. We deal with them a lot. But overall, this is a new program that's going to be able to benefit a ton of people. And it's not guaranteed to stay forever. A lot of times these programs come out, they're good. They last for 6 months, a year, year and a half. Money gets dried up and that money gets thrown somewhere else. So jump on it while you can, in my opinion.
Yeah. I mean, this became available in June 1st. Salute Our Soldiers, another Florida housing program. Everybody that was in that program was rolled into the Hometown Heroes program. So this now actually opened up the opportunity not only for just like veterans, for also active duty. There is a long list of available professions and also the individuals.
Massage therapist.
Yeah, massage therapists, chiropractors, cardiologists, pulmonary, you name it. If you have a Department of Health license to practice in the medical profession, give us a call. We'll make sure that license is one of the approved, and you may be eligible for the Hometown Heroes program, for down payment assistance. That can be huge. And also in the medical profession, when we talk about, I like that you said massage therapist, and only because those are careers and the individuals that they went and got trained, they have a license, but they're also self-employed. A lot of times. So they're not always working, as a W-2. They are self-employed a lot of times, or they're contractors, so their income is going to be a little bit more unique and different. And that also puts them into this new category, like, being able to consider at least now having a down payment assistance program, whereas typically self-employed borrowers have a lot of different hurdles that they have to go through to get a home as well. And we do have products that help with that as well. So if you are a Hometown Hero, is anybody who is, really a person that is dedicating their profession and their craft to helping others, give us a call, give us an opportunity to see if we can help you get into your home as well. So like I said, there's a long list of it. This was also an initiative that was really spearheaded by realtors in the state of Florida. So, a lot of kudos to the individuals who advocated for this program, and also for Florida Housing to say, we want this program, but we have these other program, so how can we get the best of both worlds? So, while Salute Our Soldiers was a very prominent loan product service that was available, it didn't go away. It just transformed into something bigger and better. But like everything, gotta do it while it's hot. Just
Your
like
motivation
interest
to
rates.
buy is to buy right now,
Yeah.
buy right now. This
Yeah.
just helps assist you, something you
Yeah.
might want to be able to ask about when it comes to you buying right now. Whether it's
Yeah.
right now, 2 months ago, 6 months ago, right now is always the best time.
Yeah.
This helps you out.
Yeah, and a lot of questions that like realtors have been having is kind of understanding the program itself. The program itself is kind of simple to explain, but it really boils down to each individual's situation, because that's where the loan numbers kind of come into play as well. So, realtors who have been asking about it, we've done some trainings already on it, and we'll continue to, provide information in different formats as well. So my biggest thing for the Hometown Heroes program, especially from a lot of the flyers that I've had to co-brand and send out, and posts that we put on social media as well, is that, it's a program. It's available. You want more information, pick up the phone, give us a call. If you go to the Florida Housing website, they're going to give you a list of approved vendors, and we are also approved vendor as well. So that means that the Florida Housing that we have met their requirements to be able to tap into this money as well. So
I recommend
yeah.
don't do the research on your own. Don't be
Please
on
don't.
housing.com. You're gonna get confused. Come to us. We're on those sites every single day.
Yeah.
We can easily give you the information rather than you spend 10 hours and you end up more confused than you actually were before.
Yeah, and when they do go, because even though we say, hey, don't go down the rabbit hole of it, go and get some questions, and then make the questions that you need to ask. It's the same when you're doing any kind of research, just jot down some questions that you have, come prepared, make the phone call. You're going to have these questions when you meet a realtor about their expectations of what you want them to do. It's the same thing that you should have for a lender as well. As a consumer or buyer, have some expectations and ask your questions. At the end of the phone call, you should feel comfortable and confident that the person that you spoke to has given you all the information that you feel as a consumer is going to help you make the next best decision.
Sure. If you got a bad cough and you have access to text a doctor rather than going alone.
Yeah.
If you have a question about certain programs that are coming up, etc.,
Yeah.
and you have access to text or call a mortgage lender, text or call us rather than spending 10 hours in a rabbit hole. All right, what else we got? How much money is necessary to live in Florida? So this is a random news story. Take it with, it may not be exact accurate data, but it is kind of crazy when you actually start adding up all the numbers, what they can potentially come out to. So this is for, let's say, average adult, 2 adults, 2 kids in the state of Florida. Housing, let's say 1,500. That could be on the cheaper side, but let's say 1,500. Childcare, also 1,500. I can believe that, especially with young kids. Food, 1,600 a month. These are monthly, by the way. 1,600 a month. I can believe that, especially if you got some giants like I do with my family. Transportation, 1,500. People can believe that nowadays, especially with where gas is at now.
Yeah.
Healthcare, 8. Tech, miscellaneous, 7. Monthly total, 7,700. Annual total, 93K. That doesn't show any savings in there as well. That's just strictly money coming out. That doesn't say vacation. That's just like someone's
Living.
normal living. Tanya, any feelings on that?
I have lots of feelings. I'm a single mom, so those numbers are a little lower than what I go through, but yeah.
Got it.
Yeah, you gotta make a lot of money.
Yeah. If you want to be, living a normal lifestyle. I mean, those are hard things to cut too. Cutting your housing, that's tough to cut. Childcare, that's tough to cut. Food, you may be able to cut that a little bit.
Like you said, there's no vacationing, there's no going out, there's nothing extra that you would want to do there.
Healthcare, that could potentially be on the lower end. That's tough to cut. Tech, 700. Yeah, you may can cut that some, but maybe in half, but that's not changing the needle by a ton. Even if you cut that in half, it's only cutting down your yearly by maybe 3,000.
Yeah.
So, Gabriela, what you feel?
These are very so when we're talking about like these are very generalized topics as far as like as we're talking about, like let's break it down a little bit. Housing, if this is looking about how somebody could live, housing includes your mortgage payment, also maybe even setting aside money for repairs, childcare. That's we're parents. We've at some point in time have experienced the cost of childcare. For my story, I became a stay-at-home mom. I could not afford 75% of my income was going towards childcare. 25% of my income was I just could not manage to do this. So, that was about 16 years ago. So even looking at it now and the cost of childcare, that is a lot of reasons why people made the decisions that they made, and women primarily made the decision to go back home, because now that's how you take $1,500 out of your budget. Somebody lost their income to be able to cut back on transportation. That includes your car payment, your insurance, your gas. So if you have 2 cars, that number is probably maybe a little bit higher. And healthcare, that could be everything from buying supplements that if you're taking supplements, hey, each his own. I take them, that's my prerogative. That could also be your medications that you're currently on. Healthcare could also be, your your copays, not down payments, your copays if you have, regular visits. But this is considered an average that somebody needs to make to live in the state of Florida. Sure, the numbers might skew here a little bit. I actually was looking at somebody else who said as a single person coming to live just to rent in the Orlando area would have to make $73,000 a year to be able to afford rent and all the other costs just to be able to live in Orange County. So that was based on her specific, breakdown of her budget that it would cost. So this is what people are currently dealing with today.
Yeah. I'll make one note about this. I like people having a budget just to be able to know, to be aware, don't be scared of it. But I do highly recommend, if you are going to start looking at these and thinking about it more, that you have a fun account. Meaning that you're setting aside 3% of your income or X amount of dollars every single month that's going towards fun stuff. Just because that's going to give you the main motivation for continuing to go out there, work, hustle. And then if you have things you want to be able to pay off, credit cards, debts, things of that nature, then that gives you a great motivation to do that, because you have, fun coming in as well. And the more you have these things paid off, the more you can start allocating towards a fund account. And it goes from 3% to 5% to 7%. And next thing you know, you have these certain debts off, you're getting all this fun money to play with, and it can make it a fun game for you. But understanding how much you actually have coming out, where you're like, yo, I make, not me, but let's say someone, oh, I make $70,000. I don't feel like I make $70,000. We'll just kind of figure out where that money's going to.
Yeah, and there's a lot of examples of budget sheets that you can download and save. You have to customize it to yourself. I know we mentioned Dave Ramsey's format as well. But you treat your household like you treat a business. The money that's coming in, the money that is going out. And if you look at your house as a business, but obviously because it's a business of survival in this situation, then you'll actually be more in aware of where money is coming and going. And should you have extra money, then that's great. What would you do with that extra money? But I think that when it says survival budget, as a media catch line, because I want to kind of increase the voice and emphasize that, these numbers are a little daunting to kind of see. So, but if you take what it's saying, create your own budget, treat your home like a business and the expenses that you have. So that way that you know, and you can prepare, because this is just survival. This isn't in case of an emergency, medical emergency, something happens to your vehicle, your home. I mean, those kind of things put families in tailspins financially, and it's hard, you know, especially when when there's children involved as well. So, good line, but I want to look at it differently. You know, I choose to put a different perspective. And, you know, that is also something that, you know, that I've been working on even myself, is like how to look at my home, my finances as a business.
Yep, but always have fun, even if it's a business or personal. All right, Americans choose real estate as the best long-term investment for 9. And I think we're almost at the last slide too, by the way. So
Yeah.
Americans choose real estate as the best long-term investment for 9 years in a row.
Yeah.
So as you can see that a lot of people are showing that their property is the main thing that they see as the most important investment for themselves. And I've had some slides and some previous ones that we've had to where like that's how people feel, but the actual data shows that the main assets that people, until they're worth around a net worth of $1 million, their real estate is normally their biggest and most important asset that they have. And if you don't own real estate and you're renting, your average net worth is around 5K, 6K, and that hasn't changed over the past 10, 15 years. While if you do own real estate, your average net worth goes up to about 225, 230K. So just by the same people, it has those numbers are, it doesn't change by income. If you compare someone who makes 20K and 20K, and one owns real estate, they have a lot more assets. If there's 50K, 50K, 100K, 100K, even $1 million, $1 million, if the person that makes $1 million a year doesn't own real estate, in general, his net worth is normally going to be a little bit less than the next person. Exactly. Any feelings on this, Tanya?
You got it all.
Cool. Let's see. How about you, Gabriela?
No, it's still the same consistent message that people have heard over time. Even if people didn't, you know, personally, who, you know, didn't feel it during the 2000, you know, from the 07, 08, you know, even still then, you know, real estate was still going to be, as it is true now, as it is true then, and as it was true even before that. That is something that I believe is like kind of like the foundation and motto of this country, is that, you know, the American dream. Either start your own business or buy your own home, you know, and have a better life than what you could have imagined, and that you can pass on to your children. And real estate, as you have talked, is also something that builds generational wealth as well. So
good. That might have been it. Let's see. Yeah, that's all she wrote so far. So overall, I appreciate everyone who came on, who listened to this video.
yeah,
I appreciate our special guest, Tanya,
thank you,
Gabriela,
Tanya.
For having us.
Yeah.
for coming to hang out. Next time we'll have Tanya and her daughter come and hang out.
That's a special little guest coming on, you know?
Yeah, we may do like a kids panel. We may have Tanya's daughter, my daughter, and see what some of this data gets translated. Because Tanya and I are on the mortgage level. You have Gabriela who's on the marketing level. Then you have your average person, like, you know, a real estate agent, and then you have your average person. But you know, what's the kids' perspective on some of this data?
Thinking about
What do
these
kids think
things.
about land value going up? The things that matter.
You know, I think we should do a summer kids edition.
Summer kids edition.
Summer kids edition. You know,
That'll have to be like a 10-minute episode. Good Lord.
you know what?
That's true.
Hey, I'm open to hearing what the kids have to say. And yes, I did sound like I aged myself, and there's another gray hair that just came out. But children say the darndest things, guys. And then especially, you know, your children are, you know, they know that what you do as a profession. My daughter knows that I talk. That's part of my job. So,
You rock them all?
you know what? I will actually have to try to make that happen. She's highly introverted. She's highly introverted. So for
Sort of like me, probably.
but here's the really cool thing that, and as you know, we love our children and we know what their strengths are, and we know, you know, their personalities and stuff. She just sometimes blows my mind. She'll just say things. I'm like, are you 15? Or are you 45? Because I don't know what you just said, but you sounded at my adult level here. And then there's times where I was like, well, Mom, I didn't find the broom. And I said, well, did you look hard enough?
No, moms know how to turn things invisible. And then when they go, they can turn it uninvisible.
Yeah.
So
something
ketchup,
like that.
you know, anytime you down for ketchup or barbecue sauce is never in the refrigerator
Oh,
because the mom turns it invisible. Then they go in there and then, you know, they use a special power.
oh yeah. We
I don't have to
cast.
find it, then they make it appear.
Hold on.
It's a mom thing.
So, you know, unless somebody gets upset about a Harry Potter reference, you know, we put a little invisibility cloak and then all of a sudden, poof, it disappeared. Then you take the cloak off and then see, it was right there. Look, yeah, look, the water, it was right here.
So you started with Stranger Things, ending it with Harry Potter, Gabriela, obviously, you know.
I told you I consume a lot of media. So for somebody who consumes a lot of media, I'd like to cut through the stuff and get to the heart of the issue.
Good. Well, that'll work. Great
Yeah.
episode. Hope you all enjoyed it. Any questions or comments or any mortgage things, you can reach out to Tanya. I'll put her information in the chats. Reach out to myself, reach out to Gabriela. We are here to assist and to serve. We hope you have a great rest of your day.
Oh, don't end. Hold on. Happy Father's Day, John.
What is Father's Day?
Don't.
Goodbye.